Just got to put it in speaker. Okay, good afternoon, everyone. I'm Sue Fasciani with Tiger Home and Building Inspections. Thanks for joining us today for renovation financing guidelines. You're going to learn a lot today about 203K and Fannie Mae home style renovation loans. I'm here with the Director of Marketing, Kara Golden. She is part of the family here at Tiger. We also have George Turner. He's going to be doing the presentation today. He's our 203 HUD consultant. And we also have a couple other people I'd like to introduce, which is Jody. She works in our office. She's our renovation coordinator. And also we have Tammy from Loan Depot. So if we have any financing questions, we'll probably ask her for those. So at this time, I'd like to go ahead and just tell you a little bit about Tiger Group. That is, we are a family-owned company. We've been in business since 1992. We perform commercial assessments and residential inspections 7 days a week throughout the state of Connecticut, New York, Mass, and Rhode Island borders. You know, we know you're out there working 7 days a week, so that's why we are as well. All of our inspectors do carry a license for wood destroying insects. So we're able to include that report for free with our home inspections. And I'm sure many of you have seen our certified staff. They're out there doing our radon monitors, setting those up. They're doing water quality testing, helping the inspectors out there so we can move those inspections along for you. And we do offer mold assessments and testing. So if you ever have any questions about our inspectors, Kara and I and our office staff are always available to answer those, as many of them carry specialties that you can see on the screen, the commercial division, the HUD, which you're going to learn about today, antique homes, and more. So please feel free to reach out to us. And before we move on, I did mention family-owned business. We're celebrating 30 years this year. We're very proud of that. So in honor of this, we are offering $30 savings on a home inspection and $30 savings on radon testing. So you could go ahead and scan that QR code right now if you wanted to. It would bring you to our promotions page, but the promo code is Tiger30. So please feel free to share that with your clients. Before we move on, I just want to tell you a little about George. He has been a licensed home inspector for 21 years and HUD consulting. It might be 22 years right now, George.
It is 22, yes.
Yeah, I got to change that. But he's a certified HUD consultant, as I mentioned, for the last 13 years and is also licensed to do the wood destroying insect. Some really nice feedback we get from George's HUD consulting inspections. So we've got that up on the screen. And without further ado, I'm going to go ahead and turn this over to you, George.
All right. Thank you, Sue. So as we go through here, we are going to stop at different times for questions. So if you do have questions, please write them down and we try to answer all the questions we can. So I appreciate your involvement with questions. As Sue said, I have been doing this for over 20 years. Every day I'm out doing home inspections. I did one this morning, as a matter of fact. I've been doing the renovation program for over 13 years now. Last year, we did 39 of these programs. So these programs are really out there and people are using them and they're working good. So what are these programs? Basically, what happens with these programs is the bank will loan the money for the purchase and for the renovation. After the closing, the renovation money is held in escrow and paid out based on the draw schedule. Why are these loans important to you? Every day, including today, I hear there's a shortage of inventory out there. We have nothing to sell. The inventory out there that is for saleable, a lot of it needs work, roofs, HVAC, new kitchens, bathrooms, and you have your home inspector go out, he looks at it, says, hey, listen, this house needs a new roof or it needs a new boiler, and the seller says, I'm not doing anything. So you as realtors can use these programs to close more sales. How do you do that in that situation? Well, you need a new roof and a new boiler. It's a perfect time. The client loves the house, doesn't have the money to do it. You can do the 203K or the home style, And what happens is they'll finance the money for the roof or the boiler over the next 30 years, which hopefully does make it affordable and they can get the house they want. You as realtors, the only thing you have to do extra is just be available to open the house up for me as the consultant and possibly a contractor. Why is this important? Why is this going on? As you can see on the map, the median age of housing in our area is 58 to 75 years old. So your clients are disenchanted because they're old and they're tired looking. The neighborhood's perfect, but 84% of the houses are 30 years or older, 60% are 50 years or older. Many of the houses are in need of new mechanicals, kitchens, bathrooms, or they want some of the new stuff. Open floor plans, master bedrooms, garages, bonus rooms, things like that. And here's a perfect example. This is a house I just finished in Ridgefield. On the top was the before picture. On the bottom is the after picture. And unfortunately, the before picture looks a little better because we just finished this house. They haven't done the landscaping yet, but they're going to re-landscape the whole house. So they wanted a more contemporary landscaping, and that's what they're in the process of getting ready to do. They were just waiting for spring. But the client wanted an open concept. They wanted a nicer kitchen. They wanted central air, and they wanted the contemporary landscape. So this was the kitchen before. This is the kitchen afterwards. If you look to the left of the picture, you can see we removed that wall completely. So the living room, the kitchen, dining room is all open. And you know, that's a beautiful kitchen. So which loan is best for your clients? The conventional loan or the FHA loan? The conventional loan, generally you need 5% money down. You can use a higher loan rate than you can with the FHA. You need a higher FICO. You can do luxury improvements, swimming pools, hot tubs, that kind of stuff. You know, fancy garages, and you can do primary homes, second homes, and investments. When we talk about conventional renovation loans, I'm talking about Fannie Mae, Freddie Mac, and the VA programs. On the 203K side, you get away with a 3.5% minimum down payment, a lower FICO score. It's for primary residences only, and it must meet FHA guidelines. The 203K programs, there's two different standard programs, the limited program and the standard program. The limited program, you do not need a consultant. The repairs are limited, no structural repairs. The majority of the banks that I know of, that I deal with, anything structural has to go through a standard type program. They can occupy the residence immediately. They usually get one contractor draw at closing, which is up to 50%, and then the balance is paid when the work is done. There is a cap of $35,000 on this program. On the standard side, you do have to have a consultant. The max amount of money that you can borrow has to be supported by the appraisal. There's greater supervision involved with the bank and with the consultant. The minimum that you can do on that type of loan is $5,000, and you can finance up to 1 to 6 inspection draws. Generally, it's 5. Some banks want an extra 6th one for the final draw. Both of these programs are subject to terms and conditions of the individual lender, which means you probably have all heard the thing, he who holds the gold makes the rules. So HUD, FHA guarantees the loan. The bank is the one that lends the loan. So FHA does have specific guidelines. However, the banks have the right to have their own overlays, and most banks do. Questions? Kara, any questions?
I do have a couple questions. Thanks, George. Is the renovation loan a separate loan than the mortgage?
No, it's one loan for both.
Great.
So what happens is that the way the loan would work is at the closing, the bank pays for the house and they put the renovations into escrow. The escrow is then paid out based on the draws. But it's one loan, one mortgage.
And can a client use their own contractors or do the work themselves?
They cannot do the work themselves with most banks. There is some banks may allow you to do something, little things like painting or that kind of stuff. They can use their own contractor. The contractor has to be approved by the bank. They have to be licensed in Connecticut, insured in Connecticut, and be vetted by the bank.
Okay, great. That's all I have right now.
Okay, moving on. So the steps to the loan process is just like every other deal you do. You go and you sell, you show the property, you sell the property, you get an accepted offer on the property. You've decided, your clients decided you're going to do a 203K or any other kind of renovation loan. The next process for you guys is to get me, the consultant, involved, and we go through the whole process with you and your client. I will tell you that the sooner you get the consultant involved, the easier the process will go through. So anyway, we go and then we do the initial assessment. And then we go through, the client selects an approved contractor and submits the bid to the HUD consultant, me. The contractor is the secret to these programs. The contractors have to meet all the guidelines. The biggest guidelines that we run into with contractors is all bids and all proposals have to be written out and broken down by labor and material. A lot of contractors have issues with that in their bidding process. We do have contractors that we have worked with in the past that know the program, and if we work with them, it usually makes the process go much faster. So after we go through that whole process, we do the assessment, we pick the contractor gives us the bids, we approve the bids through the client and myself. And I do the work write-up package. The work write-up package has all the cost estimates and all the displays that the bank requires. I then send it to the bank. The bank then sets up the closing. You as the realtors get paid and your job's done. Then the renovations begin. The draw inspections are performed as the work progresses. The work is completed. We have the final inspection and we get a certificate of occupancy. Once that's done, the final draw is paid to the builder. So here's another example of a house we did in Fairfield. As you can see, on the left was the original, on the right is the finished. On this job, what we did, we painted the outside, we remodeled the kitchen, remodeled the dining room, put new windows in, updated the bathrooms, and painted it throughout. Again, here's the kitchen before, the kitchen after. I mean, who wouldn't want this kitchen? Unless you don't like white. Kara, questions?
I have a couple questions. So just to clarify, a 203K home renovation loan is different than a conventional home renovation loan?
Yes, the only difference is the way the bank handles it. The 203K is a HUD program, whereas the conventional, the home style, that type of thing is a bank program itself.
Okay, great. And I do have another bank related question. So Tammy, if you're there and you want to expand on anything George just said, and also someone's asking, are interest rates higher for renovation loans?
Okay, so I can build on what George said. So a 203K loan is going to follow FHA guidelines. So all the things that go with FHA, that's going to follow the 203K. And then the convention, so like a 3.5% down payment on a 203K, a conventional home style is going to follow all the guidelines of a conventional loan. So that would be a 5% down payment, gift money, any of the things that go with FHA or conventional will, same things will apply to both those different types of reno loans. And then the interest rates are a little bit higher on reno loans. 203K, just like regular FHA, the rates tend to be a little lower and more forgiving, whereas conventional, they're a little bit higher, and there's mortgage insurance would apply as well. So
great, thank you. So if a buyer does a regular home inspection and has a conventional loan, and then they find out they need a lot of repairs, and want to change it to a renovation loan, can they do that?
They can do it either way. They can leave it as a conventional, do a conventional renovation, or
I think they meant like a regular loan and then they decide to change it to a renovation loan.
yeah, they can do that, and they can change it to a 203K at that point. In other words, if they're planning on doing a conventional and the 203K renovation part of it works out better, they can switch to a 203K.
Great. And can a client choose to have a consultant even if they are doing a limited program under the 35,000? I believe it's a separate fee paid by the client, correct?
That's correct. Yes.
Okay. Absolutely. And aren't there some scenarios, George, where the bank will still require a consultant even if it's under the 35?
Yes. Anything that would be a structural issue, or anytime there's utilities that are missing on the initial home inspection. In other words, if there's no electric on or no water on, the bank is going to usually automatically require it to be a standard.
Thank you. And my last question, and I think we're going to get to this, but if after closing contractors begin renovation and find unexpected issues, as can happen in renovations, will the bank reassess their renovation loan?
Yes, you're right. We're going to get to that. But what happens is they build in a contingency fund anyway. So.
Great. Thank you.
That's it? Okay. So what happens next is when we do the assessment, we go out to the property and we actually walk through and inspect the property, and we do what they call a 35-point recap. And we go through the proposed work write-up. In other words, we do the inspection with the client there. We look at 35 line items. Everything that HUD does has to come under these 35 line items. And the majority of the banks on the conventional side use the same guidelines. So we'll go out and we'll inspect the property and do the 35-point recap, and then talk with the clients about what they want to do, what their wants are, what do they want to see different, what do they want to add to the house. So then we look at the existing structure and determine what has to be done as far as thermal efficiency. Thermal efficiency basically is no broken windows, no wind blowing through the house. If there's no insulation in the attic, we got to put the insulation in. We got to make the house thermally efficient. We check for smoke detectors, smoke and carbon monoxide detectors in the state. It must meet Connecticut standards. We do a wood destroying insect inspection if the bank requires it. Not all banks, and the majority of banks are not requiring that anymore. We look at health and safety concerns. The big health and safety concern everybody hears about with FHA is flaky paint. But beyond flaky paint, hand railings, GFI protection, those are all things that would come under the health and safety concern, and we have to address all those. Any of the concerns we see do have to become part of the renovation. We check the major systems. The big thing we do with the major systems is make sure they're there and make sure they're functional and they have future life expectancy. Meaning, we go and look at a house, we look at a boiler. The boiler's 40 years old, it's functioning, but it's 40 years old, and the majority life expectancy is 30 years or less, then we're going to have to put a boiler in. We're going to have to put a heating system in. Same way with an electrical system. We look at an electrical system, it's a 60 amp electrical system with fuses involved. Can't do it. So we're going to have to upgrade the electrical system to a 100 amp circuit breaker system. Private water systems being wells, we have to do a water quality test to check to make sure the water is good and potable. Septics, we have to do a septic inspection and make sure they're functional and they have existing future life existency to them. If it's on a street where there's public water or sewer, we're going to have to hook up to those unless we have to get an exception because it's cost prohibitive. But generally speaking, if it is available, we do have to hook up to it. All these things can be done by the home inspection. If it's done by Tiger, we include that as part of it. So it saves them, the client, money. They're not paying anything extra for the assessment. They still have to pay the consultant fee, but they don't have to pay an assessment fee. Then the purchase guidelines are pretty much the same. The house and the renovations have to appraise out. So, I mean, if you're looking at a 90% loan to value, you don't have to appraise out more than that. So that works either way, whether it's a conventional or it's a HUD 203K. On a HUD 203K, a great deal of banks will allow you to go to 110% of the after improved value. So that gives us a little more leeway to work. What types of homes are eligible for FHA? Of both programs, actually. Single family homes, 1 to 4 unit families, condominium units. Condominium units, the renovation money can only be used for interior use. Mixed use properties being you have a building that you have two restaurants on the first floor and you have 2 apartments on the second floor. You can use the renovation money to renovate the 2 apartments, but you can't use the renovation money to renovate the 2 restaurants. And then there's programs set up for the government and nonprofits, none of which I've ever done. But the big thing with this program is that these programs are not only for distressed properties. Here's an example, and these pictures are terrible, and I apologize, but I'm not a great photographer. But as you can see up on the top picture, you can hardly even see the house. This is a house in Westport that I did last year. This was a very extensive renovation. We spent over $300,000 on the renovation. The bottom picture, you can see what the back of the house looked like, which had great gardens and everything. And it's a very nice house. However, this is what we did with it. So the top picture being the front, the bottom picture being the back. This program was really interesting because if you look at the house, when the client bought it, him and the contractor and the architect, before I was involved in it actually, had decided they were going to extend the house out, not up. And then when they went to the town of city of Westport, the city of Westport said, no way, your setbacks are no good, this and that. And so what happened is I got involved in it. We worked with the bank and the bank allowed us to go up instead of going out. And so you can see that. And then on the bottom side, you can see the wood steps there. The wood steps are there is because, again, on the original prints and original drawings, they had a deck on there, but the deck was not approved by the town. The town came to do the final inspection and said, So now what's happening is they're putting in a stone patio there. And we worked with the bank again and got it all approved through the contingency. So there's going to be a nice stone patio there where those stairs are. But here's this house. The top left is the original kitchen. The bottom left is the new kitchen. And the right is the master bathroom. I mean, it's gorgeous. It's a beautiful house. So what expenses can be financed in a loan? Obviously, material and labor. The material and labor does have to be broken down by line item. The contingency reserve, what the contingency reserve is set up. Usually it's either 10% or 15%, 10% if all the utilities are on, 15% if the utilities are not on. The contingency reserve is set up for just like the realtor or whoever asked the question, something comes up, it was unforeseen at the time of the assessment. That can be anything, electrical, plumbing, any of those things that come up that were unforeseen, we can add that in and take it out of the contingency reserve. Some banks will allow you to finance up to 6 months of mortgage payments if the house is not habitable at the time of the closing. But that is determined by the bank and the program you're using. All permits, inspection fees, home inspections, water, septic, all those inspection fees can be included, as well as the HUD consultant fee, architectural and engineering fees. Is there a time limit for renovations? Absolutely. Renovations are required to start within 30 days of the closing and be completed no longer than 6 months after the closing. Another house, very, very interesting house. Actually, this is the most interesting house I've done. The long and short of this is what happened with this house is this was a barn that was built in the late 1800s. And then in the 20s, it was converted into a home. and it was actually used as a speakeasy. And the speakeasy, the room for the speakeasy, the hidden room, is still actually in this building. But the unique thing about this was this is a couple from New York. The husband is in finance. The wife is an artist. They bought this house as a second home. They used this program because the husband decided that he was doing so well on Wall Street and money was cheap that he did this program rather than pay cash for it. So, but what they did is if you look at the top, this is the back of the barn, believe it or not. The front of the barn fronted out to another piece of property that was actually separated the property from the main house originally. But if you look down at the bottom, you can see what we did with this is you can see it's got a standing seam roof on it. We put a garage on it. We changed this whole part down here. This here was just all boarded off. This is now the new front entrance to it. And you'll see a picture in a minute of what we did. But and then we did a complete reno of the interior. Again, the left is the kitchen originally. On the right was the kitchen afterwards. This stairwell did not exist in the building. And what happened was, if you look here, this barn, the first floor, you could only access from the left as you're looking at it. And the second floor, you could only, and the third floor, you could only access from the right. So the contractor built that stairwell right in here. So it goes up, so you have full access to all the floors in either direction. So, and the stairwell is all made from lumber that they took out of it as part of the other renovations. So really cool. It was over $250,000, but beautiful renovation. Great house. So there's also an energy program, solar program. And the way this works is if you put solar panels on the house and it costs you $115 a month to finance those solar panels for 30 years, the way the government looks at it is if the cost improvement is beneficial to the client. In other words, you'd have to save more than $115 on your energy bill every month for it to work. So that goes for solar, goes for hybrid water heaters, it goes for windows or any other energy efficient program that you want to use. How do I get paid? Here's the way HUD has set it up. And this is the way we do it, and all consultants, as far as I know. Basically, if the renovations were $5,000 to $7,500, the consultant gets paid $400 for his consultant fee. If the renovations are $100,000 or more, the consultant fee is $1,000. It is subject to additional fees. The additional fees would be the draws and any change orders. The way the funds are dispersed is the consultant fee is paid up front. Then most banks will either reimburse the consultant fee to the client at the closing or give them a credit for the consultant fee. And then the draw fees are added into the loan itself. The draws are financed, like I said, up to 6 draws. Most banks, it's 5 draws now, and some banks want the 6th draw for a final draw by whoever is going to do it. Sometimes they want a appraiser to do the final draw. Banks hold back 10% on all of these loans. The 10% is used and paid out as a part of the final draw. They use this 10% money as an incentive for the contractor to do his work quickly and professionally. And then, like I say, on the final draw, the 10% is added into the final draw and he gets one final big check. Contingency reserve, again, usually 10 to 15%, depending upon utilities or the condition of the property. Banks can and do have the right to request a bigger reserve for the contingency. I've had done them up to 20% based on the bank's requirements. Then the final draw is always done after the certificate of occupancy or final inspection, depending upon the town. And then the contractor gets his final draw. This is what a draw looks like. It's all 35 line items that we've been talking about all along for this. As you can see on the left column is those 35 different line items. And then of course the dollars and cents is how it is done. And then we pay each draw by the progress of the work that's been completed. And again, here you see a small house. The people love the house. This is actually was a refinance. They wanted a bigger house. They really couldn't find a bigger house that they wanted. So they did it a refinance. And this is what we did. We almost doubled the size of the house. So it is a great tool for helping clients realize the home of their dreams. This is another simple one. Again, this is one we did based on the client and the seller couldn't come to an agreement. They were doing an FHA loan. You can see all the peeling paint on the house on the left. On the right, what we did is we put all new windows in it, energy efficient windows, and we put a new siding on it. So again, questions, Kara?
I do have a couple questions. So do condos need to be FHA approved?
Yes.
Okay. It's a very specific answer. Okay. And can you give an example, George, of a client that you've recently worked with, and not necessarily the renovations that they did, but just tell the story of your involvement and how you guide them through this process?
Yeah, so what happens, usually what happens is I get requested by a realtor or client looking up, they've heard about it, they've read about it, they Googled it and they saw these programs, and I'll get a call. So I go through with the client basically what they want to do, or why are they getting involved with this? Sometimes it's a realtor referral, sometimes it's a mortgage broker referral. But I get the call and I explain the program to them, how the program works. And then we set up a time to meet. Sometimes we meet at the house if they're at that point. Sometimes we do it as a Zoom meeting if they're just starting in the process and thinking this is what they're going to do. Then we come to an agreement as to what they want to do as part of the renovations. And meaning I go through the whole house with them as part of the assessment, and I'll say, what are we going to do in the bathroom? And we'll go through the specifics of that. What are we going to do through the kitchen? We go through the specifics of that. Sometimes I've had where people love the house, but there's no garage. So we'll go through do the whole assessment and we'll add a garage or whatever else they may want to do. I've done a bunch of where we add a second floor dormer on a cape, or on a ranch house at a whole second floor. So then what happens is after we've decided what we're going to do, we decide on a contractor. Again, the issue with the contractor is the contractor has to bid based on the programs. The biggest part I run into with the contractors is with the bid process, they have to separate everything by labor and materials. The big issue with the contractor is I don't want anybody to know what I pay for the materials. Everybody knows the contractors, general contractors are going to make money on this. They're going to charge 20% on it as a general contractor, just like they would for anybody else. So that's not a secret. It's really not a problem. However, I have found, I'm sorry.
Sorry to interrupt. So in my understanding of this, do you recommend then that, obviously we have a realtor audience today, that they recommend to their clients that they work with contractors that are experienced with renovation loans, because then they understand the program, they know how to work with you to get the clients to the finish line?
I recommend that 110% of the time. That makes the deal so much better for everybody. That makes the deal close timely. The biggest delays we have usually are with contractors. So if we have a contractor that's very familiar with the program, I'm doing one in Coventry, Connecticut right now. From start to finish, I had the whole thing done in 10 days. And within 10 days, I had the contractor's bids, everything was into the bank within 10 days. So it does move much faster if you're using a contractor that absolutely is familiar with these programs.
Great, thank you. I don't have any other questions right now. Anybody else want to chat in a question? We'd love to answer that for you. Otherwise, you can move on.
So my final comment is, please, if you have questions, you have clients that have questions, you have concerns whether a property would be good for it or not be good for it, you can call me at any time. I'm happy to work with you any way I possibly can. These programs are a great program. I'm dedicating almost 50% of my time to these programs now. So please, if there's anything I can do to help you, just reach out. And then I believe from that, I'm going to turn it back to Sue. Yes.
Actually, you're going to turn it back to me.
Oh, to you. Okay.
Minimizing your risk by choosing the right HUD consultant and home inspector. All of you know, if you work with a professional team from your home inspector to your loan officer and so on, you're managing this transaction is much easier. Couple of things that are important in the world of home inspections is working with inspectors that are fully licensed. So home inspectors in Connecticut are allowed to do inspections as interns, which basically means that they're, inexperienced or haven't gotten their full license yet. So ask that question. Also, do they carry insurance? No insurance is required in the state of Connecticut. Obviously, Tiger carries errors and omission, liability, and workers' comp, or I wouldn't be bringing that up today. And then obviously working with a professional organization that offers you a high level of customer service, the services that you need as far as environmental testing, has that supervisory license for WDI. And one of the other things, obviously, is working with companies that have the specialties that you're looking for. We're here today to talk about renovation loans. Obviously, George Turner is a licensed home inspector, and he can also combine that with discussing at his inspections, discussing the option for renovation loans, if that's something that clients are interested in, or start the assessment process right there at the home inspection if they've committed to that type of loan. So just, working with organizations that have the credentials and obviously the specialties to service your clients. And then, reputation and experience.
Yep.
So we have a raffle winner, Sue.
Yes, and our winner is Nancy Leonard. Congratulations.
Look how excited she is. I love it.
Yes, so I will be in touch with you on how I can get that to you.
And we have all of our contact information. One more slide, George.
Yes, so thank you for attending today. We do look forward to working with you and your clients in any way, whether it be 203K or home inspection, environmental testing. We do it all for you. And please, feel free to go on Facebook and like us, or Instagram. We always do our Tuesday tips and like those as well. And you can also find many of our past seminars on YouTube. So we hope to be hearing from everyone soon, and thank you again for attending.